Alright, so in this video, we're going to be going over the model I use. It consists of a few confluences, one being a liquidity sweep, one being a breakage structure, and then it also respects the confluences that have generated like fair value gaps or an order block or equal highs and equal lows. So let me show you how this works out. So let's go to our trading day, which is going to be New York session. And just to show you the layout, we have market open at 9:30. We wait for the 9:50 macro, and then after that, that's when we actually find our trade. So what do we see here? We see movement up, movement down, movement back up. What is this right here? A liquidity sweep. Okay, since price swept this high right here, then mixed out a liquidity sweep, and then what are we targeting? Lower levels of liquidity, right? So now what are we looking for? We have our liquidity sweep. Now what are we looking for? Breaker structure. And we went over that in the previous videos. Breaker structure is what? It's a series of candle closes beneath a previous high or previous low. So we see we have our high, low, high, low, high, low. So now we want to see it close beneath this candle right here, which we do see right here, right? So now we have our breaker structure. Now we have our breaker structure. Now what are we looking for? Respecting confluences. So within this breaker structure area, what do we see? We see a bearish fair value gap right here. We see a bearish order block right here, right? So we see that price is in bearish movement, okay? So now what are we looking for? Now we look for our entry, because we have what? Our liquidity sweep. We have our respecting confluences, and we have our breaker structure. So we do something like this. We would say this is actually like we're live marketing right now. Let this play out. Okay. We have our breaker structure. So now what? We mark out our fair value gap, we mark out our order block, and we wait for a retest of this area right here. Right? And then we'll set our stops to this high right here and target the low down here. And we're just waiting. We're still just waiting. We see price then sweeps liquidity down here and creates a new low, and then another new level of liquidity as well right here, right? So now we're waiting, and we're waiting, and we are waiting. We see price taps back into this level where we broke structure, and it also respects our bearish confluences above, so that's why we enter off that retest, okay? And we're targeting liquidity down here. And what do we see as well right now? We also see another bearish fair value gap form right here, giving us more significance of bearish movement. See price taps back into this fair value gap and then proceeds to go lower. To look at this on a 3-minute time frame, it might simplify it, but this is what we see now. Now we see our breakup structure, we see a 3-minute order or 3-minute fair value gap right here, and price respects that as well. So that's essentially the model. Let me show you it again on Thursday. All right, so here's Thursday. We have our pre-market. We have our liquidity right here, and it gets swept. And then what are we looking for? A breakup structure. Where do we see that? We have our high, low, high, low, high, low, high, low, high, lower low. So right here at this low, once we see this candle right here, once we see that candle close below it, that indicates our breakup structure, okay? And now what are we looking for? Respecting confluences. All right. So what do we see within here? We see this order block, right? We see this fair value gap, right? And we see this fair value gap right here, okay? But here's what happens. Now we see price is inversing. So there's two trades you could take here. We could either wait for the retest here, or we can trade off of the breakup structure down here. Why? These are both good setups that follow our trade plan because we have a liquidity sweep, we have a breakup structure, and we have respecting confluences. How do you see that? So we have our liquidity over here from London session, and we see price sweeps it right there. Okay. Price sweeps out liquidity right here. All right. And then what does it do? It creates a inverse fair value gap that invalidates this fair value, that bearish fair value gap right there. It creates a bullish inverse fair value gap. And what does that indicate? A market structure shift. All right. And how can we trade off of this? We can trade once it reaches back into this inverse fair value gap right here. Set our stop to the candle that caused it, and then we could target liquidity up here, or we could target the level that it broke structure at. That's one example of the trade you could have taken off of this day using the model that we use. Another one could have been if you still did it off the initial breakup structure we initially marked out, we would wait for it to retrace back up here, okay, and enter off of the level that it broke structure at. So we would enter off right here. We would set our highs to right here, our stop loss to right there. And then what are we doing? Either targeting a 3R or targeting lower levels of liquidity. So a 3R would look something like this, 110 points, or you could target lower levels of liquidity and get either a 4 RR reward trade, or you could target even lower level and get a 6 RR trade. So now let's go back to the previous day and see if we could find a setup. All right, so here, what do we see? We see this high right here get swept, okay? Bang, liquidity sweep. Now what are we looking for? A breaker structure. Right now we see we're in an uptrend. And how do we find a breaker structure? We want to see a close beneath a recent low, okay? So we go high, low, high, low, high, low, high, lower low. So right here, that's where it breaks structure at this low right here. Okay. And then what are we doing? Now we are looking for our respective confluences to confirm we are going to the downside. So we have our breaker structure now. Now we're looking for respective confluences. So what do we see? We see a bearish order block right here. We see a fair value gap form right here within that order block. Okay. What else do we see? we see price is hunting out liquidity down here. So it makes this new low down here, right? And on top of that, this is what our entry is going to look like. We can either enter at the level where it breaks structure, okay? Or we can enter off the confluence that was created after, which would be this fair value gap right here. And we can set our stops to the high right here, right? And then what could you do? We could target a 3R, which would result in 65 points. Or we can target lower levels of liquidity right here, which makes it into a 6R trade. And what do we see within this movement down here? We see a new fair value gap gets formed right here, right? A new order block also gets formed right here. And we can see prices respecting these confluences. So that's all the model is. It's a liquidity sweep, a breaker structure, and entering on either the confluence itself that gets formed after the breaker structure, or you can enter off the actual level where it breaks structure as well. Now for this example though, if you saw, where were we? Now on this example, if you noticed, the level where it breaks structure for the stronger confluence, it would have been down here on the 3-minute, but we're marking it on the 1-minute right now. And we see that when it breaks structure right here at this low, price actually doesn't retest it during the after the 950 macro. And that's why we entered off of the fair value gap that followed it. We can see price does retrace into it before the macro occurs, but that is not when we trade. We don't trade before the 950 macro. We trade after that from 9:50 to 11 a.m. That's when we look for a trade. If we don't find our trade, then we don't trade. It's as simple as that. So let's go to Tuesday and see what we can find for you. All right, so this is also a really good example. So we have our liquidity right here at this previous high. We see it get swept, right? Liquidity. Just to type this out for you. We see it get swept. So what does that mean? That's our one check mark off of our trade plan. So we have a liquidity sweep. Now we're looking for a breaker structure. Where do we see that? We see a breaker structure, not here, because this is our recent low. We see a new high get made, and then it doesn't close beneath this recent low. So now we're looking for a breaker structure right here. What happens? We make a new high, then a new low, doesn't break it. So now our new level of structure becomes right here, new high, new low, doesn't break it, new high, new low. That's going to be our new level right here. And then we have a new high, and then when we make that new low, it breaks structure, okay? So right here, this candle, when we see that close beneath this level, that is what indicates that breaker structure. So now, yep, we have our liquidity sweep, we have our breaker structure. Now what are we looking for? A respecting confluence. So let's see what we see here. We see a, where am I? We see a, we see a 3-minute order block right here, right? And then what else do we see? Let's drop back down to the 1-minute, see what we can find. We also have equal highs right here, just to show you. Delete that order block really quick. We have 3-minute equal highs right here. All right. Go back down to the 1-minute. the heck? What just happened? No, sorry, we're on Tuesday, not Wednesday. That just confused me for a second. So let's just cut back to these bars over here so that doesn't happen again. So we have our equal highs right here that get respected, so that's good confluence. And then we have a bearish fair value gap form after that does get disrespected, so we wouldn't want to enter off of that. But what do we see right here? This big candle right here is our 3-minute order block. And then it also creates this new 1-minute fair value gap. So we have our breaker structure, we have our fair value gap. What do? Now we have respecting confluences. So now that's when we're going to be looking for a trade. How would that look if were wondering? Let's cut back to right here. All right, we have this low right here, and we want to see price break beneath this level. Okay, bang, this candle closes beneath that level, so that indicates our breaker structure. And now we're looking for our respecting confluences. And what do? We have equal highs right here, we have a bearish fair value gap right here. What do we want to see? We want to see it retest into this fair value gap. We'll set our stop at this high right here of the candle that broke structure. What are we going to do? We're going to target either a 3R or target lower levels of liquidity. Okay. So we're waiting. Price sweeps out this low, okay, and creates a newer low, creating new levels of liquidity. So our trade would look something like this. We're going to target this low down here or target a 3R. I like to target a 3R because 9 times out of 10 always hits that. It doesn't always seek out the lowest level of liquidity from what I've learned. So that's why I don't always target a low level of liquidity. But here's what we see right here. We see this breaker structure. We see another fair value gap form down here, but does get invalidated by this candle. And what do we see? We see a bullish fair value gap form right here. So as we're targeting down this low on our trade, we're going to expect to see some resistance in this level right here. All right. So we get enter once it hits this retest. Okay. It respects this bearish fair value gap, so that gives us more confluence. And what does it do after it respects that? Creates a new fair value gap right here, a new bearish fair value gap right there, which gives us more significance in the market that, yeah, we're bearish right now. Right, and we can see as we get down to this fair value gap right here, we get that resistance. Okay, and then we invalidate it with this candle close right here. Okay, and just like that, we hit the lowest level of liquidity down here. We still secured 5R without even targeting that. We targeted the other level, and that's how this model works. And that's literally the model I trade every single day. I don't ever trade a different model, just because when you stick to one trade plan and you know it works, there's no need to try and trade a different way. So what are we looking for when we're trading? We're looking for a liquidity sweep. We're looking for a break of structure. And we're looking for confluences to be respected. It's a 3-step trade plan. It's nice, it's easy, and it works. With that being said, let me show you another example. Let's go to Monday. See if we can find a trade here. Let's see what we see. we see we're consolidating. We have liquidity right here at this high that gets swept. And then what do we have? A breakage structure right here at this low. Right? And what do we see after this breakage structure? We see a 1 minute order block right here. We see relative equal highs right here. This level of liquidity. We see relatively equal highs. What else do we see? We see a fair value gap form right here. Right? What else do we see? That's pretty much about it. We have equal highs, a order block, and a fair value gap form. So what do? We can target liquidity right here. And this is what our entry would look like. We enter off this level that it broke structure. We set our stop to this high right here. And we're targeting either liquidity or 3R. So this is what 3R would look like down here, 129 points. Or we can zoom out and see that, hey, we have an even lower level right here. Or we can zoom out to an even higher time frame and see that we have lower levels all the way from over here. Even if it's from so many months back, it's still a low and still a level of liquidity. Don't ever forget that. You can see price takes out this low right here, right? It also takes out this low right here. So we'll zoom back in and see that we can target the 3R or we can target lower levels of liquidity, which also work. Okay, now let's find you another example. So now let's go to Friday. What do we see here? We see this high get made pre-market. So that's going to be a level of liquidity right here. We see that it gets swept. We see that it gets swept. So that's going to be our sweep on liquidity. Check. Now what are we looking for? We're looking for a breaker structure. We are in this downtrend, breaker structure to the uptrend. And then we see high, low, high, low, high, low. Right? And what do we see right here? We see that this low gets broken by this candle right here. So that indicates our breaker structure now. Okay, and now what are we looking for? Respecting confluences. So we have, let's see what confluences we have here. We have relative equal highs right here. We have a, let's see, we have a 3-minute order block right here. Okay, what else do we have? Down on the 1 minute. We have a 1 minute fair value gap right here within that order block, right? And what do? We enter off the retest. So now that we broke structure right here, let's see what we see. We see this low get made right here, so that's going to be a new level of liquidity that we can target. And we see this previous low right here, that's also a level of liquidity that we can target, right? So now if we were trading this live, here's what it would look like. So we have this order block form, okay? We have a breaker structure right there, okay? we have this fair value gap form right here, right? Another one form right here, okay? You see this is being respected, right? Then it gets invalidated. That's not a problem. We have relative equal highs right here. But we can see that, yeah, it's respecting this order block and also respecting this fair value gap. So this is what our entry would look like. We would enter off right here. And we can either set or stop to the top of the fair value gap or the top of the movement that broke structure. Okay. And we can target what? A 3R, just like this. And watch how price plays out. Now we have right here a new fair value gap that formed. Just like that. Let's see what we see on the 3-minute. We have a big 3-minute fair value gap like that. So now this zone right here is going to be our resistance to the downside. You see it trades back into this 3-minute fair value gap to fill that imbalance and then continues lower. Just like that. So that's going to be it for the model itself. If you don't understand it, rewatch the video. It's a good model. It's a model I like to use. It's a model that's been working for me for the past year. What is it? It's a sweep on liquidity, a break of structure, and then we must see price respect the confluences. It's this 3-step trade plan, and it's the one that works that I like. Simple as that. So just to draw this out for you, let's say we have this high right here, okay? We sweep this high, that's our sweep, okay? And then we create structure right here. We're on an uptrend. But then we see a close beneath this right here. So that's going to be our break of structure. Even right here would also have been a break of structure because of how I drew it. So that would have been our break of structure right there. And let's say this is our order block right here. So that's our break of structure. This is going to be our order block right here, right? And what are we targeting? This low down here. That's all it is. Sweep on liquidity, right? Sweep on liquidity, a break structure, respects this order block, and we enter off the retest. That's all it is. So that's going to wrap it up for this video. Go ahead and go to your charts now and back test this on New York session, whether it be AM session or PM session. That's what I trade. I'll show you one more example really quick. So we have these highs right here, right? They get swept right there by that candle, and then we create new highs. All right. What happens again after we create those new highs? It gets swept again, and then what do we see after this high gets swept? We see a breaker structure where? Right here at this low. Okay. Where do we see it? What indicates that? That when this low formed, that creates our new structure level for this bullish movement. And then when this bearish candle right here closes beneath this low, that indicates our breaker structure, right? Now what are we looking for? We're looking for our confluences that respect to this. So what do we see? We see a what do we see here? Let's see if we see anything in the 3-minute. We see a 3-minute fair value gap right here that gets respected. What else do we see? We see a what else do we see? So we had a 3-minute fair value gap. That's really the only confluence I see. We have this 3-minute order block right here that's being respected, right? So let this play out, see what happens. You see price sweeps that level that we had, and that's what our entry would look like. We would enter off the retest right here, and we set our stop to this high right here. And what are we targeting? Either a 3R, or we're targeting levels of liquidity. So for a 3R, it would essentially be this low right here, this level of liquidity, or we could try targeting this lower low all the way down here. But when we're targeting these lows down here, we have to keep in mind the other bullish confluences that follow it. Because right here, we have a bullish 3-minute fair value gap, and we have a bullish 3-minute order block. So that's going to be our bullish fair value gap, and right here is going to be our 3-minute order block. So yeah, it might hit this low, but I'm sure we're going to see resistance. So let's see how this plays out. So yeah, we hit this, we sweep this low right here, come back to fill out this imbalance, continue to hit lower lows. And then once we get to these bullish confluences, we see price rejects off of it and creates new bullish confluences. Like right here, we see a bullish fair value gap form right here, but then gets invalidated. What else do we see? We see new equal highs get created right here. And now let's see if we invalidate these bullish confluences and continue to the downside. We also have a new 1-minute order block get formed right here, giving us more bearish confluence. Let's see what happens. Go to 3-minute. What do we see? Now, look at that. We see this 3-minute fair value gap get invalidated, and what new has formed since then? We have a new 3-minute fair value gap right here, another 3-minute fair value gap right here. And what do we see? We see prices now trading in this 3-minute order block. So let's see if we can close and invalidate that as well. Just like that. Once we see this candle close beneath this order block down here, that makes that now an invalid order block, and price is now hit down all the way here. So that's it for this video, and that's it for that last example. What did we see? We saw it sweep liquidity up here, and then what do we see? We're looking for a break of structure next, which we don't see right here. Because why? Because price didn't close beneath this low right here. We don't see it right here because price didn't close beneath this low right here. It made a new low. What do we see right here? Price doesn't close beneath this low right here either. So what are we looking for now? We're looking for price to close beneath this low right here, which it doesn't happen. So then we go to the next recent low, which would be right here, and then down here. And then that's when we finally see our break of structure right here at this low. And we see prices respecting these confluences. And that's why we enter off of that right there at the level where it broke structure. And we set our stops to the highs up here. And then we either target a 3R, which would have been this low level liquidity right here, or we could target a lower level down here. I'm not saying it's always going to target the lowest level of liquidity, but it does do it most of the time. I don't always target the lowest level of liquidity. I like to target at least a 3R for every trade. And if I like how price is moving, I'll leave a runner to target lower lows and make more money. It's a sweep on liquidity. Then we wait for a break of structure. And then we look for respecting confluences. And we can either enter off of the confluence itself or enter off the level where it broke structure. That's it for this video, guys. But also, as always, go back, test it, and build confidence on your own, because that's the most important part in trading, is having confidence in the model that you trade in so that you can actually execute. That's going to be it for this video. Hope you guys enjoyed it. We're pretty much getting close to the end of this combine, and I hope you guys have learned a lot and are much more knowledgeable than you were from when we first started this.